Todd, Bubba Horwitz joins us now to take a closer look at the market action in our trader rundown, and always a pleasure having you on the show.
It's always great to be here.
What are you watching for in the market today? We are getting closer to that jobs report on Friday. We have a slew of economic data coming into the market today.
You know, I think we're still in that holiday kind of period. I mean, we've had a week that's been, very whippy. First of all, short week, and we had, up and down, and really kind of convicted, like trying to make sure that we get these rallies going. But I think everything's going to be decided tomorrow on the jobs. That'll be the first big indication of what the economy is really going to do and where we think we're going to go from there. So I think that's really what we're watching. You're seeing volatility still drying up out of the market.
Are traders happy with the market action that we've been seeing of late? I know investors have to be pleased because investors really aren't losing much at this point.
Well,
They're gaining.
Investors are still gaining. Markets are still going up. I mean, as from a trader standpoint, at least this week we've had a little bit of price volatility. We haven't had the VIX volatility or the implied volatility, but we've at least had some movement in price. So that makes it a little bit easier depending on what you're trying to trade. But overall, traders themselves would love to see a much higher volatility market, which much bigger swings and much bigger whips. But it's not as bad as one might think for this time of year.
A small amount of money, but if you had $100, what would you do right now?
If I had $100 right now, I would actually probably try to short something and try to take advantage of the impending sell-off. Or if I didn't care about the 100, I would just going to put it in and I would just buy something. Because one thing we do know for sure, I could be bearish, I could be looking for the markets to sell off, but year over year, time after time, the markets will go up over time. So if you had 100 that you weren't worried about, you put it in the market and you forget about it. Just make sure it's a good quality company.
Or maybe just an S&P 500 index.
Yeah, I mean, the spiders, that would be great, yeah. I mean, again, we're going to go up over time. There's going to be corrections. There's going to be, bumps in the road. But if you have 100 or 200, whatever the number is that you are not concerned about, that you're not going to need to pay the rent tomorrow, you can put it in the market in a good, solid company, or the S&P 500, or the Russell, or any of those companies or ETFs that are going to be in business. Obviously, the nicest things about the ETFs today is that they're a conglomeration of companies, so they're not going to go out of business, and there's not going to be any earnings to worry about.
Thank you for your trader insights today.
Thank you.